Hey, are you thinking about buying a home in Arizona? I want you to save money like my last buyer, Tommy. He got a house that was listed at $600,000. It appraised for $605,000. We closed escrow at $530,000, 4% in closing costs, got all the repairs done. There was a strategic way we went about it. In this webinar that you're about to watch, I will go through the top mistakes that buyers make that typically cost buyers up to $50,000. I don't want that to happen to you. I'm going to break it down really simple, and then I'm going to give you a chance to book a time with me. Google me, research me, see my numbers. Been doing this for a long time here in Arizona, but I hope this webinar is helpful. And if you want the same deal that we got Tommy, book a time and I'll show you how we can do that for you. Enjoy the webinar.
Once again, thank you for everybody who joined. We are really happy and excited you're here. I think you're going to get a lot of value from tonight. I'm beyond thankful that we've got Amber here. So I'm going to tell you a little bit about her. I've been doing this 17 years. I'm a realtor. So I own the Dave Zajdzinski home team. And I've worked with a few lenders in my career. And I can tell you, you guys have probably, I think, a top 5 lender in the country that she's an icon in the industry. She teaches, she coaches, she speaks, and just a great lender. Sometimes I ask her, why do you keep doing this when you don't really have to anymore? And she just loves doing it. So we both love teaching. So let's move to what we're going to talk about. Let me ask you, and I'll introduce Amber fully, but I was just giving you a little teaser there. So, and keep using the chat box. We really want to hear from you. We're reading it. So as a first-time home buyer, and there might be some of you on here that have bought before, but sometimes I say, oh, is this your first time buying? No, we bought before. Oh, when was the last one? Like 18 years ago. Okay, so it's a little different. But right now, how do you feel? Are you concerned? Are you stressed out? Are you intimidated? Have a little anxiety? What do we got here?
Somebody stressed out.
Very stressed out. Yes. Can someone that's not invited join the meeting? Yeah, if they can get the link, they do need the link to get in. So if you got the link that was sent to you, send it to them. But then Mo, my IT guy, he might correct me if I'm wrong. And if so, we'll look in the chat box. But we're feeling nervous as when is the best time to buy a home? That's such a great message, because here's what's interesting about buying real estate. We want to buy as a buyer actually in a seller's market. It seems so counterintuitive, because think of it this way. If you knew, let's say stock, Apple, you want to buy Apple stock, and you knew it was going to be worth more in 5 years and it was going up every day, would you want to buy that? Or do you want to buy it when it's going down? I kind of want to buy it as it's going up. Guess when it's going up? It's when it's in the seller's market. So I really look at seller's market as a winner's market. Everybody's winning. The sellers are getting what they want, but you can be comfortable knowing it's going up. So I don't like buying things and then a year later seeing them down. And people who are holding off, and we're kind of getting off track, but if you're holding off, you're waiting for it to go down. It's typically going to go down for a little bit. So why not buy as it's going up, right? But that's a great question, because everybody is seeing that. And then Maribel, we want to buy the home we're living in right now. That's great. And we can help you with that. We've done that many times. So at the end of this, there's going to be a Q&A. Please put in your questions as they come up. We may not get to them during this because we want to stay on track, but we'll get to them at the end. Okay. So put them in there as you're hearing it and as you're thinking about it. And if you think it's a dumb question, it's not. I promise you somebody else just doesn't have the courage to ask it. So be courageous for them and ask it. But let's meet your speakers a little bit more. But this is what we're going to do. We're going to cover the top 6 mistakes. And that was the spoiler. I wanted to see if anybody remembered, but how much did we say you can save by coming to this class? Let me get a few people to drop in the chat here. Do you remember the dollar amount we told you could save? So I'm going to type that in there. 50 grand by John. Yep. Okay. Good job. John's all over it. And again, been doing this a long time. So we have seen this. I can't tell you how many. It's funny, on my drive back, I got my kids off to swimming, came back, and I saw an email of mistake number 5 from one of my most veteran realtors. And I know it's not her, it's her buyer that's making this mistake. And I know this buyer didn't come to this class, and they are making mistake number 5. You'll see it later. But this is me. On the upper right is my team, and that's too short of what our current team is right now. And then the bottom is my family. That's my team at home. So we have 5 children, 4 girls, Been married to Julia for 17 years, and I've been doing real estate for 17 years. So we kind of started that at the same time. I've had the privilege of doing over 1,000 home sales. Your average realtor will sell 7 homes in a year. So I've had a busy 17 years. I like to speak and do some coaching. I like to teach, but at the heart of what we do is real estate and mortgages. And we share a passion that everybody deserves a home. If you want a home, we want to help you get there. Just last week, we talked to a mutual client who was afraid to work with us because they got pre-qualified with somebody else for 100,000. 100,000 was all they could afford. Nobody called her back. The lender didn't call her back. The realtor didn't call her back. They just moved on, which is just a shame. But you have people who are trying to make a living, earning commission. And if there's not enough commission, they want to move on. Let me tell you, if you're thinking 2, 3, 4, 5 years from now, or you're thinking, gosh, I can only afford 100,000. Right now, I'm going to post a direct link to my calendar. So I ask you, so check the calendar or check the calendar in the chat box. Respect my time. It is my calendar. It does fill up rapidly. But if you know for sure you want to talk to me more to the next step, and it's free, everything I do is free, go ahead and book it. Let me put it in here to everybody.
And I want to take a moment just because I'm such a big fan of Dave's, and it's hard to brag on yourself a whole lot. So I got to do a little bit. But Dave is one of the most creative, like out of the box, like tough negotiating, just super caring realtors that I work with, that I've seen in our marketplace. And in my opinion, having a top performing realtor is hands down one of the very most important things that you can have in your real estate purchase, because they are the ones that are going to navigate this whole thing for you and help you find the right home and negotiate the right price and go through all of the different steps. And you could not pick a better person to have advocating for you than Dave. And it's so easy for me to say that because I believe it 100%. And not all realtors are created equal. And in this industry, a lot of them are part-time. They have a passion for it, but it's, they're also, a mom, or they do another job part-time. And it's so important to have a full-time realtor that's in it to win it. And that's Dave. So I just had to say that because I am just such a big fan. So.
Well, I appreciate that. And I do love doing it. So I love doing real estate. And I bought my first home at 23. And for some reason, I just thought I had to do it. I'm 43. And at 23, I just didn't think I got to go do this. So I want everybody to do that. And so, but here's Amber and her family, been doing mortgages for 19 years. She's top 1% across the country. I'm honest when I say you guys are so lucky she's here tonight, because there are so many. I just think there's good people in this industry and there's bad. And Amber is a gem with her knowledge and what she can do. And she can cover all of Arizona. So you've got a couple of pros that really want to help you across that finish line if this is what you want to do. Here's some reviews. This one, we've actually become friends. We did the loan together and the house, and I've gotten to know Christina here, helped them with their second home. But this is what she said here. Dave and his Z team are my agents for life. Trust is incredibly important in home buying, and Dave and his team are the most trustworthy group I've ever encountered in real estate. I hate pushy realtors who are just trying to make a sale. Dave and his team actually want you to be happy with your purchase. They are incredibly knowledgeable, responsive, and all around good people. We spent nearly a year looking for the perfect home, which I remember that, and we never felt pressured or rushed in the process. Dave is well known in the industry and in the Valley. He knows all the best people to help you on your home buying journey. We have bought 2 homes with Dave in 6 years, and we will always rely on the Z team for all future selling and buying. Thank you, Dave. And one thing I was so proud is they're a younger couple, and they got into a home, and we talked a lot about investments and life and building wealth and doing the right things. And they did such a remarkable job to be able to go out and buy a second home as an investment property, and still while in their 20s. It is awesome. So here's a review for Amber. Amber Kovarik is absolutely one of the most well-informed lenders in the business. Amber has so many different options and really helps you choose the perfect program that works best for you. She thinks outside of the box and has a solution for anything that may come up. Her team is communicative and takes the time to explain everything to their clients. I love working with the Kovarik team. I always know we are going to get to the finish line, and it is so true. So that being said, what are the steps to home ownership? Well, this is what I believe is the blueprint to do it. One is come to a class like this and learn everything, and then book your free strategy meetings. I've already seen a few pop over, like congrats to those who are grabbing time on my calendar now so they can take that next right step. Then the second step is going to be getting a pre-approval letter with your mortgage broker. That's Amber Kovarik. And what we do here is we believe it's right to have a good strategy session, understand the big picture of what you want to do, and not just run off and pull your credit. We don't want to pull your credit until we have a good conversation and then know that's the second step. What we frequently see are people jumping right out to go see a home. And it's very tough to have somebody get their hopes up, go see houses, take time off on Saturdays or Sundays or whenever, like not be with their family and friends and go out there. And they really just don't even know, like, can I buy a house? What can I buy a house for? And we haven't done a good job in this industry of saying, here's a proper process to do it. And that's why we're passionate about doing these here. So the right step is this: get educated, and then let's chat. We do it via Zoom or come into the office, and then we get you pro-qualified. And that's the first time home buyer qualification. We have a guarantee approval. Amber will talk about that. If she gets you approved and can't close on your loan, she will actually reimburse you. House hunt with your realtor, that's step 3. And that's what we go over more in detail. But today we're just going to cover those mistakes. But we search and find. It's my job to offer and negotiate, help you with the home inspection, to get your financing done, to coordinate with the title company, to walk through the property. Every step, from looking at homes to giving you the keys, we handle. Any questions on that you guys want to drop in the chat box? Is everybody with us? Everybody still good? All right. Now, this process, I am not going to spend more than a second on. I want you to know this is what we would do in the office. This looks overwhelming, but this is when we have a chance to sit down. This is for any home that's out there. This is for new homes. We do a lot of work on new homes, okay? So just because it's a builder doesn't mean we don't work with that. So are we ready for mistake number 1? All right, ignoring the first-time home buyer incentive program. Amber, why don't you walk us through that?
Yes, I would be happy to. Now, one kind of myth or misconception out there would be that there's one first-time homebuyer program out there, but there's not. There's a variety of them. There's not really a one-size-fits-all solution. And so, Dave said the word a couple times, but what we really love to do is have a strategy session to understand what your goals are, what your needs and your wants are, and tailor a solution that meets all of those different needs, because everybody is a little bit different. But we have a variety of down payment assistance programs available, and they're going to be specific to where in the valley or in the state that you're buying in. There's income limits on some of the programs, and there's different amounts of the grant. So again, based off of your needs, we'll determine which one is best for you. This is just kind of a quick example of one of the down payment assistance programs and the power behind it. If you were going to purchase a home at $350,000, I think the average median sales price is around $390.
Yeah.
So we ran it at like a $350. So this is an FHA, first time home buyer grant program. Minimum down payment is 3.5%, which you can see here would be $12,250. FHA has an upfront mortgage insurance premium that's rolled into the loan amount. So that gives us that total loan amount of $343,660. And this program has a 5% grant associated with it. What that means is that you have a 3.5% down payment that is all being covered by the 5% grant, plus leftover 1.5% of the loan amount to go towards your closing cost. The cash to close that you bring in on a home purchase is the combination of your down payment and your closing cost. In this scenario, you would have almost $5,000 left from that grant money to go towards your closing cost. This would be probably a couple $1,000s out of pocket for this scenario. So we have a lot of programs, even for those clients that haven't saved up a lot of money for down payment. And we're using these programs as a way to really help our clients win in this super competitive market. So again, this is something that we would deep dive into on an individual basis to determine which program is best suited for you. There's really 4 main types of mortgages.
That program, they are getting 5% as a grant, and that's coming from the state of Arizona, right?
Yep, it's coming from the grant program. So it is money given
money
to
that they
you.
don't have to come up with. That covers a down payment of the $12,000, and then they still. Does everybody understand that? Does everybody see that? So this is free money that most people aren't even aware of. They're thinking, I got to save up money. I got to save up money. And for some reason, I rushed into it at 23. I said, I just want to go buy a house. And I think it cost me like $3,000. I just didn't even think about it. But don't you find so many people think, well, I don't have the 20% down plus all that. Like, I just don't have 50,000. That's massive. It's 5% given to you. Now, is that paid back or is that free?
After a 3-year wait time, it is forgivable. So as long as you keep that mortgage for 3 years, then that 5% grant goes away. It's completely forgiven. And so it's a very powerful way to help you get into a house, let you build up the equity in that property while using, free money to get you into it. So it's definitely an option that we look for with a lot of our clients, especially the first-time home buyers that aren't selling a property with equity in it to roll into the next home, which is you on your second purchase. Now you have this house that's appreciated. You can use that equity as a down payment. It's the hardest one usually is that first purchase when you're trying to come up with the down payment. So this is a great tool to help you get there. And so the types of mortgages, conventional, FHA, USDA, and VA, those are really the main types that we're seeing for first-time home buyers. Conventional and FHA are the most common, and we look at both of them, and they have some differences to them and which ones we use. A VA loan is a 100% financing loan that is available to veterans. And so we would pull something called a certificate of eligibility to see your entitlement and your eligibility for that. But if you have VA entitlement, that's a great program that we could look into. USDA was the other one, not as common in our market, just because it's an agricultural loan. So it's for like rural areas. And our valley has just gotten so developed that those areas have been pushed so far out that we're not seeing a lot of interest, but it is available. So the one loan I mentioned was FHA. It's the Federal Housing Administration loan. And it's very popular for first-time home buyers because FHA has the most lenient debt to income ratio requirements, meaning that you can qualify for a higher amount on FHA. It's also most lenient in regards to credit score. So currently we can go down to a 600 credit score on an FHA loan. So that's going to be the minimum credit score across all of the programs. And then also FHA has one of the lowest down payment requirements of 3.5%. And so that is a really good loan program for someone who needs that little bit higher debt to income ratio, or maybe has the credit that's not over a 680. That's what we're really looking for on a conventional loan. Now, on an FHA loan, just to kind of summarize too, the benefit as well is a refinance. So a refinance is when you have your mortgage in place and interest rates drop and we want to take advantage of a lower interest rate. We can do a refinance. We can restructure that loan to take advantage of current market rates. And on FHA, they have a streamlined refinance, which means you can refinance without a full requalification and a reappraisal of the property. So that's a really nice advantage of FHA. Also, FHA allows the seller to pay your closing cost up to 6% of the sales price. Now, asterisk, that's not really happening in our market right now. We're in a very competitive, seller-driven market. That is more in a buyer's market where we're seeing sellers pay that concession, but that is something that, we touch on when we are in that kind of a market. So more flexibility is given on FHA loans. On a conventional loan, these loans are going to be a little bit tighter in regards to qualifications. So we're going to be looking at a maximum debt to income ratio of somewhere between 45 and 50%. We really like to see credit scores above 700 because conventional loans are very credit score driven. So the higher your credit score, the lower the interest rate. Anything below a 680 is when we really tend to go FHA because the credit score will very much impact the interest rate. Also having the lower debt to income ratio, but the benefit of a conventional loan is that it allows you to go to a higher loan amount. So I want to show you kind of the comparison between the two here. So you'll see that on FHA, the down payment minimum is 3.5%. And on a conventional loan, it's 3%. Minimum credit score on FHA is 600. On a conventional, it's 620. Debt to income ratio on an FHA is 54%. What does that mean? It means that all of your debts that show up on your credit report, so auto loans, student loans, installment loans, anything that's reporting to credit, plus the mortgage payment on the new home, those numbers combined cannot be more than 54% of your gross income. So gross income is before taxes are taken out. So that's what we're looking at to qualify you for an FHA loan. The maximum loan amount is $368,000. So that's where sometimes we're needing to go into conventional if you're above that loan limit threshold for FHA. No income limit, no minimum out-of-pocket contribution, meaning that you can get a gift from a family member to cover your down payment and closing costs if that's available to you. Conventional loans, the big difference is that loan amount. You can see we can go all the way up to $548,250. So we're going to be able to cover a lot more ground with that program. Same thing, no income limit, no minimum out of pocket on that program. Okay. So help me out here. When you look at this list, give me a guess in the chat. Which of these bullet items do you think you cannot use for down payment? What do you think in lending is an unacceptable source of funds for down payment? Credit card, sticks, cash,
Cash.
stocks.
Oh, which cash, Sam? We got cash and then undocumented cash.
Yeah, probably both.
Undocumented cash, right? Is that right? Did I get it right?
Yeah, undocumented. Yes.
Nice.
So what we use a lot for down payment actually is 401k or retirement accounts. Most 401k providers allow you to take a loan from your 401k for the down payment on a home. This is something a lot of people don't know. And you can typically borrow up to 50% of your vested balance. So whatever you put in, you can usually take a loan up to 50% of that amount. And then you set up payments on that. There's no interest on it. You're just paying yourself back. And they set up a really small payment. I just had a client take a $15,000 401k loan, and her payment was going to be $32 a month back to herself to pay that back. So they set that up. It's a great source of down payment funds. Gifts. This is when like the rich uncle is awesome, is when you're buying a home and he says, oh, I really want to help you buy a home. Gifts are completely acceptable. We just go through a simple documentation process for those. Stocks and bonds, as long as we can, document them, we can use those as down payment. Credit cards, no, you were all right that said that. It is a debt. You cannot borrow on unsecured debt for down payment funds. So you can't take a loan, like you can't take a private loan for down payment funds. If you had another home and you had a line of credit or something on a secured property, you could borrow, but for private loans, not acceptable, or undocumented cash. What we hear so much is, I have mattress money, or, I have the stuff, the holes in the yard with my, cans in there. And it's like, okay, first step, get that into the bank. And then we have to let that season for 60 days before it's usable. So that's why, in my opinion, it is never too early in the process to start your pre-approval. Ever, never. I don't care if you're 1 year out or 3 years out. We love to put together your path, because if you have mattress money or, credit challenges or whatever it is, we're going to lay out the plan for you to make sure that you're ready to buy when the time is right. But undocumented cash is a big deal because people think they can deposit it and use it. Lenders like to see the paper trail of everything, and they don't know where that money came from. And there's only certain acceptable sources. So if they can't see it, it's unusable. Got to put it in the bank account, let it season for 60 days. So thanks for playing that game with me. I appreciate it.
Yeah, good answers. Good answers. And
yes.
I could see there were people who were surprised on the undocumented cash.
Yes,
and
it's a big thing.
So you can get around it, right? But like you said, so if everybody understands, seasoning just means when they go to look at your bank statement that it's been in there for 60 days. But
Yep.
what about, I'm curious, what about reoccurring cash payments? Like people who just work via cash, right?
Yes, we cannot use that money. We cannot use cash. It does not work. Now, if they are continually depositing cash deposits that are not large amounts, then we don't have to dig into those deposits. The rule of thumb for an FHA loan is that as long as the deposit is less than 1% of the sales price of the home, we don't have to document it. So let's say you're buying a $300,000 house. As long as your deposits are under $3,000, we don't have to source that money. It's the larger amounts that we have to dig into. So again, we can help you strategize on how to get the money into the bank in the best possible way.
Yeah.
So a big part of the process is a lender determining your ability to repay. So the whole thing with a lender is they are lending you money based off of the collateral that you are purchasing. And their whole job is to determine your ability to repay the loan and your willingness to repay the loan, which is really your credit report and looking at, how have you been paying your other debts? And then again, the collateral, which is that property. So that's mistake number one, is ignoring that amazing grant program that we talked about and the power behind the different low down payment loans like the FHA and the conventional 3% down first time home buyer loan. So now I would love to jump into mistake number two, which is one of my favorite ones because I'm so passionate about your pre-approval. So what happens is that the homes are way sexier than the mortgage, right? Like nobody really wants to talk about a mortgage. They all want to talk about the house. And I totally get that. I don't take offense to it. But the mortgage really comes first because if you don't know what you qualify for, then you don't know what to look at. And you don't want to get yourself excited about a house that doesn't meet your payment or your financial needs. And so it's really our job to help make sure that we tell you and Dave what type of property, what price, and what structure that you should be looking at. So in a mortgage, there's three main pillars of your loan approval, and that is your credit, your income, and your down payment. So those are the three things that we're really going to dig into to determine your ability to repay.
Let me chime in on that. On my end, on the real estate end, most home buyers, like you said, we get excited about the home, and that's kind of where we start. We don't know, nobody's told us how to start it. So we just naturally start at the home. And it is such a pitfall. It's one of the biggest mistakes. And I have seen tears and tears and tears and tears from it. And even people that I'm saying, let's just go get that pre-approval. Maybe they're friends of mine. I've gotten to know them. And they're like, oh, I'm going to go buy this car. I'm like, would you just stop? Like, we just make assumptions like I'm definitely going to get a mortgage or I'm definitely going to qualify for this. And I've been in homes where somebody's crying because we finally get the news that our expectations were way out. Or I have had people come to me and say, I just sold my company and I got paid a ton of money, but I want to go buy a home now. It's like, great. And they're like, trust me, I'm qualified. And then once we finally find that home, the home that they love, they go through the process and said, well, when you sold your business, you signed a non-compete that you can't work in this industry for 3 years and you can't get a mortgage now just because you got paid a big check to say your company. Just people who have no idea, it just catches them way off guard that they can't buy, or maybe they can buy for more, for less. So I don't think it's the costliest mistake we'll see, but I think it's the most disruptive and the one that really hurts people the most. They really get disappointed, or you get set on the home in the neighborhood that you want, and then come to realize you're way out of line with something, right? Wouldn't you agree?
Yes. Yeah. It's really important. It's the first step of like the fact finding mission of buying a home is, what does my mortgage qualification look like? What am I going to need to buy a home? And so that's really what we're looking at: your credit, your income, and your assets, and just a better understanding of what you're really looking to do. I think I got kicked out somehow.
Okay, let's see. All right. Can we still see the screen?
Yes.
Okay. All right. You got it.
So one thing that we cover all the time with our clients, this is like a constant reminder from the beginning of the process all the way to the end, is what we call our do's and don'ts. And this is because we want everybody to have a successful loan transaction. And so this list is just some of the most common ones that we experience. But the biggest thing to remember is that when you do get a pre-approval, is that the credit report that we pull is good for 120 days. And you don't want to do anything during that time that's going to affect your credit profile that would potentially harm your approval process. So that means don't take out any new debt. Don't, rack up your credit cards. Don't have your credit pulled by anyone else. All those things are going to affect your score, and we want to keep your credit profile in the same shape as it was before. So my big thing is, if you're questioning, should I or shouldn't I do something during the loan process, just ask us and we will guide you. But staying employed with your same employer all the way until the closing date, leaving your credit alone. It's not the time to go buy like your European vacation, to co-sign on a debt with anyone else. There's just some things that we kind of, do. And we were like, oh no, I just had a client like quit her job a week before closing. And I was like, oh my gosh, I send you these things like 5 times during the process. And we were able to add her mom to the loan and still get closed. But we really want to avoid any kind of turbulence during the process. So these do's and don'ts are a big deal. And then we talk a lot about pre-approval. So pre-approval, just to kind of give you the lay of the land and how the process works, is up front when we get your information from you, we request some supporting documents, we review the pay stubs, the W-2s, the bank statements, and we say, yes, you are pre-approved. We give Dave your golden ticket, which is the pre-approval letter that he will need to go make an offer on a home. And that is basically me giving my word that you are qualified. So as long as you don't do any of the don'ts and you keep your credit profile intact, you stay employed, we will close on your loan. Like Dave was mentioning, we have a guarantee in place because we're so confident in the quality of work that we do, that we say, if for any reason your ticket is not valid and we have an issue closing your loan, we will credit you up to $6,000 at closing, cover any earnest money that you might have lost, cover you for any out-of-pocket expenses that you've incurred by that time. Knock on wood, that is not something we ever have to do. It's very important to me and my team that we issue great pre-approvals, because we do not ever want to put someone out there into a home that then cannot qualify for it. So once we give you that pre-approval, that golden ticket, you go under contract on a home. Now you go into the underwriting process. So this is when an official underwriter reviews everything along with your contract and gives you that stamp of approval. And so what we're actually doing right now as part of this competitive market is that when you come to us for that pre-approval up front, we are submitting you into underwriting at that time. So we're not waiting for the property contract and for you to be moving forward with that like we normally are. We're submitting you in prior to, for a couple reasons. One is, in a competitive market, the seller's biggest concern is that they're going to accept an offer from a buyer that doesn't really qualify and is going to fall apart in escrow, and the house is going to have to go back on the market. So we want to tell that seller, oh no, our buyer's already been through underwriting. We're good. They're qualified. Make them feel more confident about you, make you stand out from the other buyers, and it will help you to close faster. The typical closing time frame is 30 to 45 days. When we put you through underwriting up front, we can close you in about 2.5 to 3 weeks, also making you a more competitive, aggressive, and stronger buyer in this market. So we're going to get you that underwriting approval up front, also going to give you the peace of mind that that underwriter's already given their stamp of approval before you even go under contract on a house. So this is what we were talking about with our guaranteed approval. We also have a close on time guarantee that says that we will pay you $500 if we don't close on time per the contract. So we really stand behind the work that we do. We know how important this experience is too, and we want to make sure that it's a really great, memorable experience. So I'm going to cover mistake number 3 too, which is using your bank. I mean, in lending for 19 years, this is something I come across like multiple times per week. When I talk to a client or I talk to a realtor and they say, oh, my client's using their bank. And when I talk to the client, it's like, well, I bank there and I trust them and they know me and we have a relationship, and I totally get all that. But how I like to think about a bank doing a mortgage is that the banks are a depository institution. That is their primary role. But they do mortgages and they do auto loans and they do credit lines and they do all of these things. But if someone is so diversified like that, can they be a total rock star at any of those things? Probably not, because they're just spread too thin. Anytime that someone is so diversified, that's usually the case in anything. And that's how it is with banks or credit unions. They're just not as focused on a mortgage. So I work at a company called Guild. We've been in business since 1960, and all we do is mortgages. So we are 100% always focused on how are we the best at doing mortgages. We service our loans. What that means is that when a client closes with us, they stay at Guild and they make their payments to Guild the whole time. What a lot of companies do, especially banks, is they take your loan, they close it, and then they sell it to someone else. And then you're making your payment to someone else and they're selling your information to someone else. And it's a real hassle and just not ideal in this environment where everybody's worried about identity theft. So we keep the loans and we have the relationship. So Dave and I have been working together for years. He's someone that I respect. His relationship means a lot to me. When he sends a client to us for an approval, that client goes to the top of our list. Dave is an A partner, and we make sure that that client gets the wow experience. And so when someone works at a bank, a credit union, an online lender, there's no relationship. And so if that loan goes south or that client gets upset, they're kind of like, Oh, well, on to the next. They tend to be more transactional than relational. For me, I'm like, okay, it's Dave and we are partners. We're in this together. Like it's like a family feel. And you'll get that because we answer our phone at night, on the weekends, whenever you need anything. Like we are seriously in it right alongside you. So I think bank loans are risky. I think that many bank loan officers, from my experience, do not get all of the documentation up front to confirm your approval. And therefore, they're more like throwing it at the wall to see if it's going to stick. And you don't know what you don't know. Dave and I had a client that we worked on together last year. They went to their bank, they were self-employed, and they had one date on their tax returns, another date on a website in regards to how long they have been in the business. The bank declined them, said they couldn't do the loan. Dave got them over to us. We figured out how to get the loan done, and we were able to come in and save the day and help them purchase their home. And I think it's just a different skill level, a different desire to like dig in and solve it. So we're all about making this a successful experience for you. We have more flexibility in our underwriting guidelines because we service it. And most banks don't offer that grant programs that we were talking about. That's not something that is in their wheelhouse. So although it seems like the great idea, and banks are getting more and more aggressive in trying to get clients to apply with them, it's risky from everything that I've seen in the experiences. And maybe Dave, you can touch on, like, as a listing agent, when you see pre-approval letters come over from banks, how does that alter your decision on which offer to accept?
Yeah. This is all really good stuff, guys, that you're hearing, because you would think we could tell everybody what to do and they would just listen to us, right? But that's not how it works. So people come to us from all different relationships, and that's part of this business. Someone says, no, this is my person. I'm going to definitely use this lender. I definitely need to use my bank. And we guide, but ultimately we can't control and tell people what to do. So sometimes we get to learn these mistakes, even when we say this is going to happen. So I can tell you another story. I'll touch on that as a listing agent, but I remember early in my career, this was a lesson probably 15 years ago. I didn't think about this stuff. I was new. I was just trying to figure out real estate. So I didn't care who I was working with. And friends of mine went with a big bank. I won't say who, but they're one of the big three, right? So B of A, Chase, Wells Fargo, one of those. Documents were wrong at the signing table. So we are at the finish line. We're signing it and it's wrong. And we can't get a hold of this big bank. Really, it's an employee, not a business owner, not a relationship. We're on speakerphone with the title company, buyers. He flat out said, I am on vacation. Do not bother me again, and hung up. And we all just looked at each other like, what do? We did not close that day, and they did not get their keys. And I don't know what happened, but it was wrong. And he said, it's not my fault. I sent it to this person. They sent it to that person, but I'm on vacation, so don't hang up. That just doesn't happen between Amber and I. And because of how our teams are set up, we are on vacation, but it doesn't stop. And we're going to pick up those phones. So that, I think that is one of the biggest mistakes you're going to find, is using them. And quite frankly, they're just not competitive in pricing, right? But as a listing agent, so what that means, guys, if I'm selling somebody's home, I'm listing their home for sale, and I get 4 offers, 3 offers, 5, sometimes 10 offers. That is a line item in my software. When we go to the seller and say, Amber, we've sold your home, we point out who the lenders are. Are they local, like Guild Mortgage? Do they have their people here, or is it loandepot.com? I will flat out tell my clients, for the sake of our hair, like I'm getting gray hairs from my kids, like I don't want more, because it's 2 days before closing and loandepot.com in a different state just isn't ready, and they don't care, because nothing's going to happen. But if believe me, if I send somebody that I am working with to Amber and she drops the ball, which doesn't happen, because I'm going to have a conversation about that and say, look, maybe we don't work together anymore, because this just. But you can't do that with these big banks or out of town lenders. They really are scary. And with the competitive market right now for sellers, we won't go with a big bank unless it's so overwhelmingly better for the sellers. But oftentimes, if it's equal, we say, don't deal with that. Does that all make sense? Any responses to that, guys? Any surprises? Anything you want to drop into the chat box? Are you guys surprised to hear that about a bank? because that is a big one we see. But we'll move on to mistake number 4. And let me tell you, this is a big mistake. My career, the first 4 years of me having a real estate license, I sold for a local, national builder, one of the biggest builders in the country. So Rachel says she's very surprised. It's common. And it's just the things we learn. And so the whole point of this, guys, is you learn from our clients' mistakes and our mistakes and don't repeat them. Learn from them and then learn from our successes. So all of our client successes, that when we do the one-on-one consultation, and by the way, I posted the link. It is constrained to what I want in my calendar. That way you can't book something at midnight and I have to show up. But if you can't find a spot in my calendar and you've been looking, just send us a message. You've been getting communication throughout this whole process. Just send me a message that says, hey, I can't meet. This is my schedule. Reach out to me. We'll figure something out. So Rachel said that was going to be my go-to. Well, now I'm not sure. Well, Amber is here to help you. Trust me. Her rates are going to be as good. And I would only do my loan with Amber and she's going to help you. So, but mistake number 4, buying directly from a builder. So that's how I spent the first 4 years of my career. I sat in the sales office to a local community here in Gilbert, one of the biggest communities. It was a very difficult position because people would come in and I would develop relationships with them and I would help them build their dream home. And they were so excited, but I did not work for the people. I worked for the builder and I had a legal financial responsibility to get them the most amount of money. And I saw $40,000 plus differences in sales price. And I had to keep my mouth quiet. And I had to go to work and see the nicest people in the world walk in and go, I hope somehow they don't find out that they are spending $40,000 more than the couple that bought yesterday because they beat me up on pricing. And I just had to take it to my sales manager and say, look, they want to do this, or they want extra incentives, or most of us are just kind of accustomed to walking in and paying the builder what they want to pay. And it was one of the worst things that I had to deal with, was seeing the discrepancies. And I could not go to the people and say, do you know that you can get more money off? Do you know that if you did this, we'd give you more? Do you know that these people did that? So we will help you with that. We are allowed to represent you, take you to any new home community and say, here, Sherry, Sam, Linda, these are people that we're going to help. And then we can kind of be that buffer in between the builder and you. And I still have a lot of relationships in that industry because that's where I started. And I can kind of see what's going on and ask them, hey, is there anything else we can do? Are there any other incentives? So keep that in mind. And if you leave here and go, well, I want to go see a new home community and I don't know who, you've got my information. You reach out. Our team can get you out there to represent you, but that's high level negotiations and you need somebody to help you there because most people just don't know what they can do. Does that make sense for everybody? Is that a surprise? I'm curious in the chat box what people are thinking there, but that is one of the biggest mistakes that you will make.
Yes. And I'll tell you really quick. So I fell victim to this mistake myself on my first home purchase. I was young. I went straight to the builder. I didn't know any better. I wasn't in the mortgage industry yet. And they took complete advantage of me. I had no advocacy on my behalf. And I was closed and in my home. And the neighbors decided to build a basement. And they took down my wall. And I had a dog. And it was this whole disaster. And I had no one helping me. And so I would never do that again. I didn't know what I didn't know. So this is a really big mistake to make sure that you avoid.
Yeah. And Rachel said, or Maribel, it happens, and it happened all the time. And it was frustrating. One of the things that I saw is, hey, here at the builder, we're going to pay your closing costs if you use our lender. But then you actually do the math and you go, well, gosh, if I keep this home for more than 3 years, the rate that they're charging me just to get those closing costs, it could be substantial. If this is going to be your next home, you just have to kind of do the math. So Amber can evaluate that and say, yep, here's the cash they're giving you, but here's what we can do to make sure you're not just going with the builder and they're locking you into a long-term loan that's worse for you. And like I talked about, the realtor there, they do work for the builder. And I can't tell you how many home inspections We rarely saw them, but when we did, I was amazed. Like we would see homes with no insulation in them. And I didn't know that. Like I'm not a builder, I'm a salesperson. And so we would have somebody actually hire a home inspector because the builder says, no, we're going to give you a warranty. It's all covered. But then we'd come back and say, yeah, that home has no insulation in the ceiling. And you'll eventually figure it out, but you're not going to get reimbursed on your electric bill or whatever. We've seen trusses cut in half. We've seen just having somebody like me there to say, let's bring in one of my home inspectors just to hold the builder accountable. So that's a big mistake. Here's mistake number 5 that happened while I was driving here. I saw the email and the client reached out to our realtor and said, yeah, I don't want to do a home inspection. Huge mistake. This is your chance. When you buy a home, after it goes into escrow, right? We have in the state of Arizona, you're going to have 10 days to inspect a property. So if we help you write an offer tonight that gets accepted, you got 10 days to find anything in that property that that needs repair or to find out. I've had people with home inspections find out that we have plumbing that went through a class action lawsuit, polybutylene. It leaches into your water. It's super unhealthy and it will eventually leak. And you would have no idea that you have polybutylene going into your dishes. I mean, it is toxic. I've had people discover that and it's a $12,000 fix. I mean, you're ripping out flooring and walls, roofs that are going, the home looks fine, but you get a home inspector up there and they say you got about a year left on the roof. So it's the sum of all parts. Like this home we thought was worth this, but we're finding out it's not worth that. Now that we've opened up the hood of the car and we've seen what's in there, it's not worth it. So never, never, never skip a home inspection. Get a home inspector out there. I mean, I've seen everything, crack slabs, mold, asbestos, just things that are going to be massive nightmares. I found a home that had pigeons rooting, like nesting in the attic, and we never would have known it. You wouldn't have known, but he gets in there and there's pigeons and they can create massive mold problems. So that can cost you upwards of $20,000. That's one of the big savings is don't do that. And why that person who didn't go to our class told our client, our agent to skip it, I just don't understand. So these are some of the things that are deal breakers, right? You want to know, and I've walked personally from homes where I thought it was a good deal. I do my home inspection, say that's just too much for me to take on. Electrical issues, rewire, replumbing. But if you skip this, you're going to inherit these issues and it's going to be yours later, right? And then you're oblivious. Are there code issues? John, do we host these regularly? We do. I think we're going to be having one in about a month. So if you missed this, that was a good question. Don't skip this. Don't do mistake number 5. And then this is the last mistake that we'll go through tonight before we open up to questions. And we don't include this on here, but I would say the biggest mistake is working with a bad lender and a bad realtor. And we don't know what that means. Like, how do we know they're good or bad? It's an interesting industry where we work with people that maybe are introduced to us versus do we review them? So go search Amber online and look at her reviews. Type my name in and search it and go to Zillow, go to sites that can vet us and work with, if you don't work with us, which we would love to work with anybody, I don't care the price point, but search out somebody that's going to do a good job and make sure these are all done. I think that's your biggest mistake. And we're just outlining the individual ones, but skipping the final walkthrough. I have a horror story on this one. And this, again, was early in my career, John. It's not good for searching homes. They're getting better. Rachel, we do work across the valley. So that's a nice thing with the size of our team. We have multiple agents and we live in different areas and we can get you to anywhere in the valley. But skipping the final walkthrough, I'm amazed how often I see this, that they'll just say, you know what, I'm out of town and they're out of the house. And so I'll get the keys on Friday. We had one where they let the owner stay. He said, can I stay a week and rent it from you? And when you do a home inspection, guys, and we look at this, home inspectors will not move furniture, but I can move furniture. So we had a home inspector not move the furniture, and the bed was in the oddest spot. The bed was positioned weird over an odd window, right? And it just, okay, we didn't move it. And then the owner said, I'd like to stay a week to get cleaned out, moved out. So they couldn't really do a good inspection. Well, when that seller who became a tenant moved out, the window had failed on the upper 2-story. and there was a massive water stain on the wood floors where they moved the bed. And the first time this client rented the home out, so never knew. First time it rained, there was water coming through the floors down to the ground, and it was a disaster. It cost him over $16,000 to fight it legally, didn't win, and then had to replace it because he did not do a final walkthrough. Probably the most expensive thing you can do is skipping that. And it happens all the time. And I know Rachel's saying, what? It's crazy. And that's just one that I've seen many examples. Cabinets ripped out, so you see the home and you sign 2 or 3 days before you're going to close escrow, and then the seller moves out and you don't walk it so in our team, we don't have you close. We don't give directions to Guild and title to close until we've seen it right before, because I have seen things taken and cabinets ripped out and holes put in, tens of thousands of dollars of damage. And now you have to go get it from somebody. You know how hard it is to get money from somebody versus I'm not going to close escrow on this home until you fix it. I'm going to pause and you're not getting any money. So we don't want pipes were hammered shut, just anything. So don't do that. That's your biggest mistake. 10,000, I've seen worse, but I would say your average price of skipping a home inspection, you're looking at 10,000. All right, this is participation time. So how do you feel now? Do people put some notes in here? Are you feeling better? Are you feeling a little bit more? And I just saw another appointment come through. So I'd love that. Book some times with me and we can talk about. So when you book a time, what that's going to look like is just a quick review of your situation. When do you want to buy? What are you looking to buy? What are you concerned about individually? And then what do we need to work on? So any brave souls want to share how they feel right now after going through this? Melissa says a little bit more knowledgeable. And this is not meant to be the entire process, right? I showed you one screen of what I do on our strategy session that gets really in depth about what we're going to do, but we just don't want you to make these mistakes because it happens all the time. But if you really want to get a deeper dive into buying and you might be a year out, please book a time with me. And again, if it doesn't work on your calendar, let's find something. So there's the link there, ArizonaHomeBuyerWebinar.com/book. And you'll see my calendar. And if it's available, book it. If it's not, reach out to me and we'll figure something out. But here's one thing that Amber is going to do, Anna, you're welcome, is really get a detailed a detailed accounting of what it's going to be. So people can go on these calculators and say, oh, what's my mortgage going to be? But this is going to be based on your exact rate, your exact situation, the area you want to live in, what your property taxes are, what HOA fees are. And the best thing you can do is say, okay, if I want to do this, it's going to be $1,435 a month, and not $1,069, right? Like a lot of people say, well, it's $1,069. Well, no, you've got some other things that we need to include in there. So book this so you can really get clear, and there's no obligation, and we don't charge anything. So that's one thing I'll touch on that's not in here. The big misunderstanding with real estate, not big, but I've had people say, when do I pay you? I go, you don't pay me. So working with a realtor like me, the seller will pay me to help you find a property. So there's no charge to work here. I hope it was helpful. We really enjoyed you guys having on here. We are here as long as you guys want some questions and some answers. So Rachel, you just said feeling a bit better. Let's see that here. So let's open that up. When a lease is up, there is much hope for buying a home around the time a lease is up. I have seen houses available now, but the timing is no good with 7 months left on the apartment lease. Is there a workaround? Absolutely. That's why if you're 7 months out, I'm a little nervous we haven't started yet, to be honest. If I'm talking to you and you say, this is when my lease is going to be up, I want to start around the 8th month, 8th month, and just really iron out the plan. So the time's now to do that with 7 months. You can get it done. So have an individual chat with us and no, because with that program, I mean, Amber, the example you showed, to go rent a house, you typically need 1.5% in security deposit, right? Pet deposits, and your first month's rent and 1.5. I mean, how much cash out of pocket to go rent when the example you showed with that 5% grant, you're talking
more
equivalent.
Yeah,
right?
and more to go rent without the advantage of the price appreciation. The last number I heard was 35% year to date annual appreciation. So real estate is the way to generate the most wealth. And right now we're on this incredible appreciation train. And so it's a really wonderful time to get qualified and become a part of that.
Yeah. So Sam just put in here, do you speak Spanish? Not very good, but we have a partner that does speak very good Spanish. So we do have a realtor partner that is fluent in Spanish and can help you with that. What do you think, Amber, from Melissa here? Is it risky to go through a credit union for a mortgage? I mean, my take on it is still
very similar to a bank, just in that it's the same situation where a credit union is so diversified that a mortgage is just a little piece of what they do. And mortgages are complicated. There's a lot of moving parts. And kind of the difference is that for me in mortgage, I work for myself. All of my business comes to me from my past clients and my partners like Dave. And when a credit union, the clients come into the bank, right? So it's just a little bit of a different model in regards to usually the experience that you get. Some are great, some are not so great. But I will tell you that when I talk to listing agents right now, they love the local lender, mortgage company that they feel confident is going to close the deal.
Yeah. All right. Jasmine has a question for us. Can two people be on an FHA loan if they are not married? Having both of us on the loan has us at a higher income.
Yes, most definitely. So you can definitely both be on the loan. And typically, if that's a situation, we'll say, okay, let's put both of you on to start. And we'll work up the qualification together. And then if for whatever reason we need to make changes, we will, but we would start that out that way.
Perfect. And I just responded, if you're again, I shut off my calendar because it's got to have some constraints. Otherwise, I don't want somebody to book it at 6:30 because when I say book it, I'm going to be there for you. But if you book it at 6:30, I got to get clearance from my bride and my 5 children. And so I'm not saying I won't, but I don't just give open access to that, right? But I will reach out to you directly. Just send me a message. And again, in the communication you were getting leading up to here, the email and the text, send it on that number and we'll get you scheduled. We'll work out something. But as you can see, it's 8:30 and we're both here. We are here to help. And I don't want to say we don't have to, but we really don't have to, but we love doing this. So we will give you our time because we are passionate about it. So it makes it easier, right?
Sam asked, as a first-time home buyer, can I use multiple programs together or is there a limit? And so the definition of a first-time home buyer is anyone who has not had a mortgage in the previous 3 years. So as long as you fall in that category, you are considered first-time home buyer. And typically we would select one program. There's a lot of different first-time home buyer programs. Once we have more information, then we'll help you determine which one's going to be best for your specific situation.
Perfect. And I'm just scrolling up. I want to make sure we didn't miss anything because I know there were some good questions. What is the best type of home inspection to make since there are multiple different types of inspection categories? That's good. So our home inspectors, we've worked with them for years. We have multiple partners. They have a background in everything. They're going to look at the roof, the plumbing, the foundation. It is an overall inspection. Then what's great, they'll say, hey, I'm nervous about the roof. So you should get a roofer out here, right? And that's why we have 10 days. Or I'm really worried about the AC because they have a little gun that determines the splits and say, something's not right. I just don't know what it is. So we'll get a report that says, here are the different specialists. It's like seeing a general practitioner doctor who says, I need to get you to a specialist. So we have very good home inspectors that can help you with that.
Mary Olson asked, can my daughter add my income if I'm not on the loan? And the answer is no. We can only use income for qualification for borrowers that are on the loan, that are going to be obligated on that debt. But what we can do is, let's say your daughter is going to buy the home to live in as her primary residence, and you're not going to live there, but you could go on the loan with her to help her qualify. We call that a non-occupying co-borrower. And then we would use both of your income. Both of you are on the loan, but it's a primary residence for her. So that could be something we could talk about more. And then how do you qualify for a USDA loan? So USDA is going to be very property specific. So I think there's parts maybe of Florence, very, very far out in the rural areas is where you would qualify for a USDA loan.
Good questions.
Yes, great questions.
Let's see, one more just
I believe I
coming.
qualify for FHA and VA. What path do I use, or can I use parts of both? So if you have the eligibility for VA, that in my opinion is one of the very best loan programs out there. It's 100% financing, no down payment required, no monthly mortgage insurance on that program. So we could compare both for sure, but VA will likely end up being the winner.
Yeah, and I love that. My dad was Army, my dad was Air Force, and I never had the pleasure of serving. Just got another appointment booked. Love it. And I just love that we take care of our veterans to make it so much easier to buy a home. I mean, it's such a great loan program. So, thank you for all that served. If we have any veterans on here, use it, take it. I've been told to shop realtors. What would you say are the best top 5 questions to ask to shop realtors? That's a good question, Sam.
I'm giving you some of my favorite questions of what I would make sure to ask.
What are they?
Are you full-time?
Yep.
You just don't want to work with a part-time realtor. Like, you think about it, you are entrusting this person to purchase the largest asset in your life. I mean, we're talking hundreds of thousands of dollars. And Dave and I have been doing this a long time. And we're not going to scare you and go through our horror story list, but there are a lot of them. And I will tell you that the majority of them come when you're not working with a seasoned professional realtor. And I hear it all the time. It's like, well, my cousin or my aunt or my brother's best friend is a realtor and they want to use them. And I totally understand that. But we're talking about like the largest purchase that you're ever going to make. And I just think you cannot risk that to someone that isn't in it full time, that isn't professional, that isn't a top producer. So I don't recommend it. And I think you really got to vet them to make sure that they're solid and they're going to guide you properly.
Yeah. And here's the thing. So doing this 17 years and not just being a solo realtor, but having a team of realtors, I know how hard this is. It's unfortunate the way it's done. It just is what it is. So realtors are commission based. So when people get compromised financially, they typically make bad decisions. And most realtors, the majority of realtors are financially compromised. So if you sell 7 homes a year, you buying a home with that realtor is a way bigger deal to them financially than it should be, because there's so much income tied to it, but they don't run a business. So, we sell so many more homes, but right, I have office and overhead and expenses. So, but I'm not stressed out the way I see realtors. And so this is all negotiations, 100% negotiation. So when I am in what I would call a cross sale, I'm representing either a buyer or a seller. I can actually look up on the MLS, the multiple listing service. Okay, Amber only sold 5 homes last year. I then am going to make everything Amber's problem, because Amber is more motivated to close that home than their client. And I have been on, if people here on this webinar could hear phone calls I have been on with the other realtors, when I say, then we're just going to cancel this or we're going to move on. And they go, well, I won't be able to pay rent if you do that. Too bad. Then you go tell your client to do this or do that. The negotiation power when you're hiring somebody, I just think everybody's a realtor and they see them drive fancy cars, and most realtors are not in a good place financially. So they put you in a bad place financially. And it's a bummer part of the industry that most people don't know. Their realtor is paycheck to paycheck. And that puts them in a tough spot. So that's why they can't, when you get $100,000 pre-qual, they say, I can't work with you at 100,000 because I'm not going to be paying bills. Being 17 years into this, being 19 years into this, we have the time to do it. So make sure they're full-time. Here's the second thing I would say in this industry that is so different now at this time is, how many of you know what type of market we're in? Has anybody been hearing that homes are flying off the shelf and that homes move fast? And John, guys, we got a big fan of John. We like that, John. It is a tough market. So what we do here is kind of like a doctor nurse at my team, or I just got back from a few flights. Like I say, when I go to check in on Southwest, I don't care who's getting me on the airplane. I just want to get checked in. But there better be a pilot flying that plane. So what we do here that's different is I do all the negotiations. I do all of the relationships, but I don't get people out to houses because I can't be in two places at once. And so if you want to get into your dream home, but I'm with somebody, what do? And most people have to wait for their realtor. We have a staff that will get you into a home and you go, oh, this isn't the one we want, or this is the one that we want. So working with an individual realtor, just a one realtor right now in this market, you will miss out because you won't be able to get to see the homes on your schedule. It's on theirs. So we kind of run an on-demand system where you want to see a home, somebody's going to get you to that home, but I'm always the realtor. And that is a big win for our clients right now, that you can get a seasoned negotiator. But if I can't show it Sunday at 3, because there's just one of me, somebody's going to get in to see that home. And that's the right model for this market. People are missing out because they can't get to see homes. The good questions. What else do we got? Anything else on there that you see, Amber?
Nope, I haven't seen any new ones, but John, if it's not now, it'll be down the road. We're all about, it's not a no, it's just maybe like a not right now thing, but we can help you build a path. It's always possible. I feel like you have the desire to do it, and that's really the main thing. And then between Dave and I, we can help, build the plan for you. Oh, do manufactured homes build equity? Dave, I'll let you take that one.
Yeah, great question. So luckily they don't. And I say that sounds like that's an odd thing, but the reason I say luckily is everybody has a different budget. And so we need certain homes to stay affordable. If everything ramped up, nobody can buy anything. And so no shame in it. My first home was a condo, right? Because that's all I could afford. And it got me into home ownership, which then allowed me to go into the next home, into the next home, into the next home. So start somewhere. And so it's not going to appreciate as much, but that's why it's affordable, right? So you can't have one without the other. It's still going to go up and you're still paying down your mortgage and you're not paying rent that goes nowhere. So you will build equity, just not at the same rate.
You just want to make sure on a manufactured home that it is a manufactured home on your own land, not a manufactured home sometimes in like one of those parks that has a land lease, like where you pay rent on the land. So
I believe one of my newer agents had that today, and I think went to you guys, and
yes.
And so, yeah, we'll help you figure that out, but you didn't own the land, you were renting it. So,
yep.
But that's something, right? I just want people to become a homeowner. Just start the process. Here's a good poll question for you guys to look, and you can use Siri if you want. Does anybody know the average net worth difference between a renter and a homeowner? So if you own a home, do you know how much more you're worth financially near the end of retirement? Has anybody looked that up? I'd be curious to see. So John says 500 grand. Rachel says, so Google this on your own. I'll spoil it for you now. People who own their home are worth 41 times more than people who rent. 41 times more. So if you want to get to $1 million of retirement, it is crazy, but it is in the way our economic model works. You are going to lose out if you don't own. And that's why I want people to do anything and everything possible, because you just got to do it one time. And I have been able to go back to my properties and pull money out of them and go buy more. They've appreciated. I paid it down. And there was a question we missed in there about rent to own. And I think it was Maribel, but we do have an incredible rent to own program. It is the best I've ever seen in doing this. So yes, if we do a consultation with you and we say, gosh, you can afford it, you can afford the monthly payment, but here are some things that we're missing. It is by far the best I've ever seen for you to lock up a home for 5 years and you're the only one that can buy it. Nobody else can buy it from you, and it's predetermined how much you spend. And right now it's only 3.5% more for every 12 months. Right now our market is going up 2 to 3% a month. Right? We're going up 25% a year. There's a company that's willing to take their cash, buy it, and say, you can buy this at any point and nobody else for 3.5% more. It's a great program. So we can talk about that. What about that question there from Walk?
Yeah.
So what do you think there?
So I don't know what home hack means. If I use a VA loan now, but if you buy with a VA loan right now, that would be your primary residence. And then the ideal is that you would stay in that for 12 months. It's not a requirement, but that's something you'll sign, saying that your intention is to live in there for 12 months. And then if you decide to purchase a new primary and the situation makes sense, then yes, we could look at an FHA loan. FHA is not strictly for first-time home buyers. It's a program we look at a lot for first-time home buyers, but it is not a requirement to do the program. So you could do VA now and then potentially buy FHA down the road if the situation makes sense. And then I saw a question from Rachel about underwriting. So yes, underwriting is handled through the lender. And right now we're putting clients into the actual underwriting process up front prior to you going under contract, just to make you a stronger buyer to compete in this market.
Yeah. Annie, these are really good questions. I really enjoyed being here. I wish
Me too.
we hide the cameras for different reasons. You never know when strangers are gathering on cameras and what can happen. I've heard some horror stories. But I would love to see all you guys and would love to meet some of you. It really is my mission to make you guys a homeowner. If that's what you want, at least find out what it would take. Like you may say, well, and this is what I hear from people. Well, I don't want to waste your time. I know my credit's bad. I know this. Get a game plan. This is what I have found. When I just sit down with people, we just got a new appointment. Awesome. It's my passion. So when I sit down with people and I'm able to give them the vision of home ownership, then it's up to you to go get it. But if and here's what most people are surprised, it wasn't as hard as they thought. They are creating these barriers and these obstacles that don't even exist. And maybe they heard, oh, you got to have 20% down. You got to have this, you got to have that. I have convinced my own relatives, a brother of mine, let's just go get you a house. Well, I don't have this, I don't have that. And I remember we were on vacation and I said, if I can get you to a home for nothing, will you go do it? True story. He was in ministry, so didn't have a lot of cash. I'm like, if I can get you in for nothing, would you do it? And I think he spent $145,000 on his home at the time and just refinanced, and it appraised for $405,000. And he pulled out a bunch of money, and it's just amazing. Like, it's too hard to save up that money. And if we could find a way to get you in a home, it's life-changing. So we believe in it. So don't feel like you're not a good candidate for us to talk to, because I want to talk to everybody who just wants to know what it's going to take, and then you go do it. But people will put the work in. If you know it's attainable and you can see it, now you have a finish line. Now you have a target to run towards, and you can start making not better decisions, but different choices, right? That's where you say, maybe I'm not going to do this or do that because this is now my clear vision. That helps me at least to know what I'm working for. Awesome. I'm happy to stay here all night, but what area of the county is
I don't know what that is.
We got a typo there. If you can clarify that, we will definitely answer. Oh, home hacking, use equity from current home to buy a larger home and rent out the first. Absolutely. Yep. I do that. That's what I do for sure. Did we answer that question?
Yes. I said, if you sold the home, then you could extract that equity to put it as a down payment. If you wanted to keep the home and rent it, we would likely have, you wouldn't be able to extract all the equity out of it. You may be able to do a refinance to pull some of that equity out before you buy. But if you want to keep it and rent the first home, that equity is probably gonna have to stay in there.
Yeah, it just depends. Like I did that recently, but I owned the home for 10 years.
Yeah.
And I paid not a lot for it, and the market appreciated. So I had enough equity in there, because when you refi, you're going to keep 70, for me, I'm going to keep 75 to 25% ratio. So if you're leaving 25% behind, but that's a scenario you can do when you own it for a while, right?
Yes.
But that's a good strategy to do. Selling faster was the last comment we got.
So what county is selling faster? What area of the county is selling faster?
Yeah, that's a good question. We can break that down on an individual call, because you can get very specific. We have the data to look at, and really we're seeing it across the country. I just flew in from Big Sky, Montana yesterday. There were 25 real estate teams like me up there from 25 different markets. Everybody is seeing this rapid sale right now. So it's everywhere. Yeah, great question or concern from Anna. My biggest fear in home ownership is having a major issue, like the AC going out, a plumbing issue, and not having the funds to take care of it. That's a responsible place to come from. And you don't want that to discourage you from owning, but know that that's a reality. And that's why that home inspection is so important. But here's a rule of thumb I have given all of my clients. When you buy a home, budget, depends on the home price, but budget about 0.5% of your home's value minimum to set aside. So if you buy a home for 400,000, I would put $2,000 a year away. And if you could do $4,000, put it, and just put it into an account knowing, hey, this is going to happen, but you're going to be 41 times more, right? The net worth is 41 times more greater when that equity builds up. So don't let that deter you. It's a great awareness that it's going to be there. So I'm a big fan of not stretching your budget and being responsible in that purchase. And there are things like home warranties out there. So you can buy a home warranty to cover some of those things, right? So it's kind of like having insurance on the house. So there's some options there, but it's the tale of two sides of the coin. You get home ownership and equity, but now you're responsible for it, but it's worth it. So do it. But yes.
Rachel talks about home insurance.
Yep.
And so homeowners insurance is something that the lender requires that protects you in case of like fire, theft, flood. So we would help you get that set up. Home warranty is what Dave was mentioning, which is a policy you get put on the house to protect you in case of like the AC or something large going out. So we see a lot of buyers buying that home warranty at closing for that protection.
Yep. I just love seeing all of these appointments that you guys are booking up. So good for you guys taking that next step. I can't wait to talk to you and just see what your situation is and see if talking to Amber is the right thing to do right away. And we'll figure that out over a quick call. If we can do Zoom, I have an office, but there's that, thank you, Mo. There's that link one more time. I'm happy to chat. Just love doing it. And it's my goal for all of you on this call to be homeowners. If you're not already, I would love to be part of that. It's very satisfying. And not just buying a home. I mean, both Amber and I are going to become trusted resources. That's what we love about this, is talking to our clients about other, we each own businesses. We're not just realtors. So I then am able to help people with business planning or just anything. Somebody reaches out to me and say, do you know somebody for this, or this? Yeah, I've got like 6 of them. Who do you need? Do we have painters or financial people? So we want to be a good resource for you guys long term, because it's such a big investment. So I hope you guys take us up on it. And thank you again. We enjoyed it. We are going to have another one of these here in the next month or so. So if you want to send it to people, and we'll get a recording out to you. But I look forward to everybody who booked a call, and we will chat with you soon. And so for now, we're going to say goodnight. And we really hope you make home ownership your dream.
Yes. Thank you all so much.